The top three things this morning are quad 4 deflation is point number one. Point number two will be Europe, and point number three will be oil, of course, because everyone's talking about it. But back to the quad 4. Again, to review, the fourth quadrant, there are two factors in the model. One is growth, one is inflation. There is one discipline that we adhere to, which is the rate of change of those two factors. When both of those factors, growth and inflation in second derivative terms, are slowing, we call that the fourth quadrant. When you are in the fourth quadrant, there are only really 2 to 3 or 4 sectors in the S&P 500 you'd own, so no, you wouldn't bang your head against the wall trying to call the SPY. What you would do is you'd own healthcare stocks, consumer staple stocks, utility stocks, and REIT stocks. Last week, what were the top 3 sectors? Bang, 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 bang. So again, those are the top 4 sectors. The worst sectors are those who are the recipients of the deflation in a very negative way. So again, the worst sectors in the market last week, again, were energy stocks, industrial stocks, and financial stocks. So again, look at the quad 4. Even if you have to only be in equities, which again we would not advocate you do, you would still be really, really right on the long and short side. So that is indeed a reiteration of the fourth quadrant. We are in that for now. Now, point number 2 is Europe. This morning is still telling you that people have no idea what to do with Europe. Obviously, people have a lot of constipation surrounding the Draghi plan. Last week, don't forget the context of this morning's bounce, which is always critical. Again, the bounce in this morning in Europe is even, well, in some markets they're not bouncing, but for example, Russia's down, Norway's down, Portugal's down. But again, on the markets that are bouncing 0.5 to a full percent, they were down 5 to 6% last week in Italy and in Spain. So again, not much of a bounce in the context of what's been a very negative scenario for European equities. So we'd reiterate that this morning. No, we do not want to buy European equities, and no, we have not been asset allocated to European equities. And then finally, the price of oil again tried to signal a higher low, and then that went away in a hurry. So again, oil being down another 8.4% last week. The fall through this morning is down for another 2.5% move. So again, fully loaded, this is just a certified train wreck. But again, you'd also call it quad 4 deflation. So again, just staying out of the way at a bare minimum of this sector would have been the right call. If you went ahead and shorted sectors like MLPs, for example. MLPs last week, terrible week, down 3.5%. So again, you could have been long REITs up 3.5% and short MLPs down 3.5%. And if you're running a hedge fund, you could have probably charged $5.50 for that. So those are your top 3 things.